Assalamu alaikum, brothers and sisters. Thank you for coming and joining us today for our presentation presented by Sharia Portfolio. Today we have the founder of Sharia Portfolio, Naushad Virji. He's going to take over from here.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you, Shafran, for the introduction, and thank you to all of you who... Oh. Hello? I can do it without the microphone.
Yeah, because you're already connected to it.
Okay. All right. So my name is Naushad Virji. I'm the founder of Sharia Portfolio and the Sharia Portfolio group of companies. Our company is focused on investment management. I am not here to sell you on our services. I'm actually here to talk to you about what Sharia compliant investing is. We do presentations all over North America. We're doing business in 14 different countries. We've learned that you don't just go in and just try to sell people stuff. We add value by teaching you, by explaining what investing is all about, how investment management works, how you can even do this on your own. So that's really my job here today. So we're going to talk about halal investing. I will tell you a little bit about Sharia Portfolio, just so you know our qualifications and who is this guy who's coming to tell me how to invest. We are an investment advisory firm, so what that means is we have to do what's in your best interest as a fee-only fiduciary. If you've heard that term before, our job is not to sell, it's to do what's in your best interest. So our agenda today is to, first and foremost, who am I? You know, who is Sharia Portfolio, in case you haven't heard of us. We'll talk about the stock market and how the stock market works. We'll try to demystify this crazy market. We'll talk a little bit about value investing, which is how to invest. And then we'll talk about Sharia compliance, how to get started, and then we'll do a Q&A. Now, full disclosure, I usually do about an hour and a half or 2 hours. If you've been to my ISNA presentation, usually it lasts about 2 hours. So I'm going to do a similar presentation in 45 minutes. So I will be talking a little faster than I normally do, and I might go through some of the material quickly, but after Maghrib, inshallah, please feel free to ask any questions. We can talk more then. So I will be kind of breezing through this. Our company was founded in 2003 right here in the US in Orlando, Florida. We started as an investment management firm. We started with clients in about 5 different states. And now we have offices in the US and Canada, and we service clients in 14 different countries. We manage about $2.5 billion in assets. We offer a lot of different types of products and services. We basically have been focused on Sharia compliant investing exclusively. So we don't do anything else. We're not like some banks that offer investment advisory, but then they also do Sharia on the side. We are exclusively Sharia compliant. That's all we do. One of the reasons is that we're one of the only Muslim-owned and operated Sharia firms in the country. So it's been an amazing ride for us because it's not just business, it's also personal. As a Muslim, whether you use my services or not, what matters to me more is that we're spreading the word that you don't have to invest in haram things to be successful. So our firm started in 2003 as a financial advisory firm. We then launched in Canada in 2017. We launched our SP funds, exchange-traded funds, which are used by banks all over the world in 2019. And then in 2020, we started expanding globally. So that's my 10-second take on how we've grown. I want to jump into now talking about the stock market. This is really the important part, and this is the main reason that I'm here. A lot of the people around the country, a lot of especially second generation and third generation Muslims have been looking at how do I grow my wealth? How do I make my money work for me? instead of just me working for my money? What do I do when I've inherited some money, or what do I do if I've got an endowment for a masjid? How should that be managed? And there are a lot of questions about the markets because a lot of people just don't know. And unfortunately, financial services is not made to be simple. The less you understand what's going on, the easier it is for banks to take advantage of your profits or your principal, and that's one of the problems with a riba-based financial system. So our view is, first and foremost, to explain exactly what is the stock market, how does this work, what is a stock, and some of this might be super basic, but there's always someone in the room who has this question that doesn't want to ask, so I'm going to go through it. A stock is effectively a certificate that says you own a part of a company. If you own one share of Apple, you are a part owner of a business. That's what a stock is. There's nothing haram about owning a business. There's nothing haram about owning a stock. Obviously, the stock has to be in a Sharia-compliant industry, but a stock in and of itself is just the ownership of a company, of a business. So whether you own one share or 1,000 shares or 1,000,000 shares, you're a part owner of a company. So that's all a stock is. Now, bonds, on the other hand, are very different. Bonds are a debt based on riba. They're based on interest. So when you buy a bond, you're effectively loaning a company or a government money at interest, straight up interest. So we obviously don't want to touch bonds. They're not Sharia compliant. I think most people understand that. What is the alternative? Sukuk. So a sukuk works very differently from a bond. A bond, let's say a company is starting up, they need to invest in a machine to make their widgets. And they don't have enough money to buy this machine. So they can go issue bonds and borrow money from everyone and pay them a fixed rate of interest. Or the alternative is, the Islamic version is a sukuk, where instead of borrowing money, somebody will buy that machine and rent it out to the business. So it's basically like a leasing program instead of a lending program. So that's what makes sukuk Sharia compliant. Sukuk is still relatively new in the United States. We haven't had a huge number of sukuk offerings in the US. There's a lot in the Middle East and even in Europe. There are sukuk coming to the US in the near future, in my opinion. So keep an eye on that. But there are sukuk funds out there, including our own, that are available on the stock market. This is a great alternative to bonds, so you don't need to touch riba. It's a equity structure, so you're not dealing in debt at all. So you can have stocks, you can have sukuk in a portfolio, you can have other types of investments like real estate. And all of these collection of investments that you make, they go into what's called a portfolio. So your portfolio is made up of different securities, different stocks. You might have Apple stock, you might have Procter & Gamble or whatever else, and you might even have some sukuk. All of that together is a portfolio. So the stock market history, this is something that's interesting to look at. When you look at how the stock market does long term, you'll notice a couple of things. First and foremost, you notice that the graph is generally going up most of the time, which is a good thing for those of us investing in stocks. However, you'll also notice it's not a straight line. It goes up and down. Now, when you're investing, it's possible that maybe you were unfortunate and you came into some money right here, at the top of the market, and now you're all of a sudden losing some money. But imagine that you're investing for the long term, you're thinking retirement or 20 years down the line, and now all of a sudden you're at this point. You've done fairly well over time without really taking as much effort. So one of the key components to investing really is time. You can't necessarily time the markets. Nobody can. I can't tell you what's going to happen tomorrow or next week. But long term, I can feel pretty comfortable that businesses are growing, that the markets are continuing to grow, even when we have significant drops like this one. the market crashes that we have, when you look at a graph like this, it looks really scary. It looks like, oh my God, I could be losing so much of my money in one fell swoop. But again, this is like a blip, because even if you bought here, look where the markets are today. So you have to always think long term when you're investing. It's crucial to focus long term, because that's what an investment is. If you're just thinking about what's going to happen tomorrow, you're actually not investing, you're speculating. There's a very big difference. So why should you even consider investing? Like, why should this be important to any of you? Well, it's not because of big houses and expensive cars. It's because you want your money to work for you. You work really hard every day to make a living, to support your family, to support your community, to support your masjid. Over time, if you build up an investment account, or an investment portfolio, then that money grows to a point where you're now making more money from that than you are from other things. And that's the ultimate goal. So you want to invest because you want to take care of your retirement or your education, you want to reduce taxes. These are some of the common reasons to think about investing. But I'm going to skip over to this slide. Having multiple revenue streams, in my opinion, is probably the single most important reason for you to invest. And I don't mean just investing in stocks, I mean investing in anything. Having multiple revenue streams. You know, you've all heard the expression, don't put all your eggs in one basket. If anyone tells you, come and put all your money in the stock portfolio, that's all you need to do, then run the other direction. You know, don't put all your eggs in one basket. You should have multiple revenue streams. The stock market just happens to be a relatively easy one. It's liquid. Liquid means you can put money in today, you can get it all back tomorrow if you want. You're not locked in for a long period of time. You don't have to invest for 5 years. You can invest for 5 days if you wanted to. So that liquidity is a really attractive thing with stocks. You can get in and out quickly. With real estate, it's harder to get in and out because just the whole process of buying a property, renting it out, and then selling it at some point takes time. And you're not going to do that in 5 days. It's going to take time. So real estate's a great investment, but it's different. It's not liquid. So having different types of investments, stocks, real estate, maybe investments in private businesses, whatever it is you're doing, it's very important to have different revenue streams, because when you're younger, you're this chart on the left where your primary income is most likely your paycheck. So most of your income is coming from your paycheck, your W-2s. And your stock portfolio, maybe you have a 401k or something, and you're getting a small amount of income that's maybe 5% of your total overall wealth. Maybe some rental property you have. When you're young, you're typically on the left side. When you're older, when you're retired, when you're my age, or close to 60, you want to be in this position where your primary income, your paycheck, is now only 20% of your overall income. And now your stock portfolio, your real estate, or whatever other investments you have are bringing in most of your wealth. So when you're in this scenario, you're in a magical place where if you're working because you want to, not because you have to. And that's really important. And this is what we all want to strive towards. And unfortunately, it doesn't happen overnight. You have to work at it, and you have to start early. Going back to that graph I showed earlier about the S&P. Why did I show that? Because long term, things work out fairly well. If you start early, then you can eventually get to this part on the right where your money is working for you. This is what you want. So this is probably the most important graph in my deck here, but I always like to emphasize this one because it is crucial for everybody to build up multiple revenue streams. And it doesn't mean you have to invest in stocks. I'm not saying that. I'm saying stocks are one of the other things you can do. You can build up a portfolio of real estate. You can invest in small businesses or, so many other things. Some people invest in expensive watches. Not me. I'm happy with my $500 watch. But there are a lot of different things you could do instead. So my point is do something so that when you're older, you have a revenue stream, your hard-earned money is working for you rather than the other way around. What are some of the other things you can do? Obviously, real estate, you could invest in commodities, business startups, currencies, art, whatever you're interested in, but have different types of investments. So I've covered why you should invest. That last slide I think was really important about the reason you should be thinking about all of this. Now, how do you invest? Let's say you are interested in the stock market. Now, obviously, that's our area of expertise. So I'm going to talk about the stock market now, and I'm going to talk about value investing. There are a lot of different ways to invest. Okay, there's a lot of different techniques and methodologies. You can argue that some may not necessarily be Sharia compliant. I'm not here to make that case. I'm here to just talk about value investing, which happens to be my personal philosophy. So I'm going to just explain this. First of all, there's passive types of investing and active types of investing. Let me just explain what that means. Passive is where you basically just invest in something and then forget about it. Okay, like a mutual fund or an ETF. You can just buy it and forget about it. It's well diversified. There's a portfolio manager handling that fund. You don't have to worry about it day to day. With an active model, it's being managed specifically for your situation, whatever your situation is. Maybe you're someone who wants to invest aggressively. So with an active model, somebody is looking out for specific stocks that are going to help you achieve whatever it is you're trying to achieve. Some people are saving up for Hajj. Some people are saving up to buy a house. Some people are concerned about education costs. Whatever your goals are, with an active management style, there's somebody, a financial advisor or somebody who's focused on what are you trying to achieve and what do we need to invest in to get you to accomplish your goals. So it's very different from passive. So having said that, the value investing, which can technically apply to both, it can be passive or active, but with value investing, you're looking to buy companies that are trading below what they're worth. So if you want to buy stock in ABC company, the first thing a value investor does is look at, well, what is ABC company actually worth? How do I know if I'm paying more or paying less than what this company is actually worth? The advantage of value investing is that it's kind of like buying stocks the way you might buy groceries. If I go to the grocery store and milk is buy one, get one free, I'm coming home with 2 gallons. And we're going to be eating a lot of cereal that week. But that's how I want to buy my groceries. If I go there and milk is now double the price, I might come home with orange juice instead or something else. But that's how I shop for groceries. Some of you might be doing the same thing. With stocks, there's no difference. You can look at what the value of a company is and decide if you're paying too much or paying too little. One of the big questions that comes up at this point is, well, how do I know if the stock is too high or too low? So I'm going to jump straight into this fundamental analysis. If I said to everybody here that, hey, look, I'm going to start a Yemeni coffee shop around the corner from here, and I said, let's all put in $1,000 and we're going to raise $50,000 and we're going to start something here and it's going to be exciting. How many people are going to jump at that opportunity? You're probably going to first say, well, wait a second. What do you know about Yemeni coffee shops? Is that a thing? Do people clamor to these Yemeni coffee shops or not? Are there any already in town? I believe you have an amazing one here in town already. So why would we start that? There's questions like that you would ask. But even if you wanted to, you would still want to know, well, how much ownership am I getting when I give you that 1,000 or 10,000 or whatever it is, right? There's probably 100 questions you're going to ask before giving me a check to partner with me on starting a business. Now, when you buy a stock, do you ask those same questions? Because when you buy a stock, you're also a part owner of a business. You're investing in a company. Do you ask those same questions? Do you look at, am I paying the right price for this company? Is there a really good business plan? Is this company doing something really unique that no one else can do? Or is it in an industry where there's so much competition then it's going to be difficult to succeed. These are the kind of things that value investors look at. So people like myself, when we're looking at stocks, we're looking at getting value. Now, some people say, well, isn't the value of a stock whatever its share price is? Now, talking about valuing a business, there's a lot of different madhabs on this. And when it comes to value, my personal opinion is that there's a huge difference between the value of a stock and the perception of value. So what I mean by that is when you're looking at the stock market, what makes a stock price go up or down? It's strictly how many people are buying, how many people are selling. That's it. Doesn't matter what the company does. It doesn't matter what their margins are. It doesn't matter if they came out with a great new product. It's just how many people are buying it and how many people are selling it. That's it. So if there's more people buying than selling, the stock goes up. If there's more people selling than buying, the stock goes down. So is that really a good indicator of what a company should be worth? So a value investor like me is going to say, no, it's not. And I can, if I had more time, I could give you a lot of examples, real life examples of this. I'll just give you one real quick one. Look at Apple. In 2007, Apple came on the scene, and what did they do in 2007? They invented the iPhone. Everyone was excited about the iPhone. Probably most of you here probably have iPhones. The iPhone came out and everybody wanted the stock. It was trading at $240 a share in 2007. We had clients calling us from all over the country saying, we got to have Apple. And at that time, the problem I had with it is that 240 didn't make sense to me because it was just really inflated for 2007. So 18 months later, the stock is now $80 a share. Okay, so it's like 1/3 what it was, right? So guess what? I called all those same clients back and I said, look, I told you a year and a half ago not to buy it. Now I'm telling you, let's buy it. It's $80 a share. Let's back up the truck. And guess how many takers I got? 0. Not a single one of our clients, not one, agreed to buy Apple stock at 80. And these are the same people that wanted it at 240. So that was quite a shock to me. And then I thought, okay, maybe they've lost faith in the company, but 18 months later, Apple's now at 350. And guess what? Everyone was calling us, asking us to buy Apple. So what's the lesson here? First of all, lesson number 1, can a company's valuation really change year to year by such a significant percentage? Like we're talking about it's worth one thing in 2007, now it's worth 1/3 of that the next year, and now it's worth like 5 times more the year after. Is that really a proper valuation? Like, do you really believe that the value of the company changed, or what it's worth really should have changed that much? The second thing is that there is a lot of fear and greed in the market. So when I say fear, people get afraid when they see a stock price come down to 80, like Apple did. So they were just afraid. They didn't have a reason to say this valuation made sense or didn't make sense. All they know is it was at a higher price. It came down to 80. I don't want to touch this now. And then when it went up to 350, all of a sudden there's this exuberance that, oh, I have to have the stock. Everyone else is buying it. I got to jump on this. FOMO kicks in, and now everyone's paying for it regardless of whether it's worth 350 or not. So that's the other lesson. So when it comes to value investing, I always suggest, think of it as if you're buying a business. When your friend comes to you and says, hey, I got a business idea, why don't you come partner with me? Ask the same questions when you buy a stock, because you're partnering with a bigger group of investors, but look at the company very carefully at that stage. Another thing, Warren Buffett, one of the world's most famous investors, he likes to say, be fearful when others are greedy and be greedy when others are fearful. So he's making the point that when everyone's afraid, that's usually when you're going to get the best deals, right? when everyone's afraid of the market, when everyone's selling, when everyone's like worried, that's usually when you're going to get the best deals. And when everybody's buying, when you're following the herd mentality, then you're just doing what everyone else is doing. You're probably or likely to overpay. Doesn't mean you're not going to make money. I'm not saying that our techniques, value investing is the only way to make money. There are people who specialize in growth investing and they do well, but they're speculating, they're not investing. So there's a big difference. So valuation, understanding what you're buying into, these are really important things to consider because this is your hard-earned money. When you're investing, it's not my money you're investing, it's your own money. It's your hard-earned money. You've worked really hard for that. Treat it carefully because everyone, every financial firm will be happy to take that, help you separate your life savings from you. Everyone's happy to do that. You have to be careful and understand what is being done with your money, understand what the strategy is, and be comfortable with it. So we believe being logical about this, looking at valuations, treating this as if it's your next door neighbor's company that you might be thinking about investing in, I think that generally can solve a lot of issues. Our company has a lot of Sharia compliant publicly traded funds on the market. We're actually the biggest fund family, I believe, in the world because we have 14 different funds. So we have a lot of Sharia compliant funds. I'm not going to spend too much time on this because I promise you I'm not going to be here to sell you anything. But I do want to talk about our private funds because when I talk about partnering with somebody to invest, sometimes it makes sense if you have someone, let's say you have someone here in the community who really knows real estate really well. Like this is something they've been doing, they have a lot of experience. They've been buying and selling real estate, renting out properties, and you can trust them. So it's a logical thing to go to them to, let's invest together. Take some of my money and let's do some projects together. So our firm has been asked many times over the years to do these kind of things. And so we do have a suite of private funds that I just want to mention because it's something I'm kind of excited about. It's something we've been doing since 2019, and alhamdulillah, it's been growing. We have a private real estate fund, a crypto fund, and a private equity fund. And alhamdulillah, actually our main administrator for our funds is someone from your community, Shafran. And I wanted to just give Shafran a couple of minutes to just say a couple of things about these funds before I continue on. And he's going to be a great resource for anyone who's interested in any of our private funds.
Assalamu alaikum, everyone. So I'll start off with our real estate fund. Our real estate fund was incepted in 2019. We have 15 properties. The fund mostly invests in residential and commercial real estate. These funds are only for accredited investors only. Our real estate fund, the minimum for a real estate fund is $100,000. It pays 6% annual distributions, and we have a minimum of 1 year of lock-in period. The second one is our crypto fund that we just launched in 2024. This is our most This is our most aggressive fund. The fund mostly invests in Bitcoin, Ethereum, Solana, and other crypto assets that the portfolio manager decides. That fund, the minimum of that fund is $250K. It does not give any distributions yet. It still has the same minimum 1 year of lock-in period. The third one is our moderate fund, the private equity fund we just launched. This fund invests in small Muslim-owned businesses. The minimum for that fund is about $100K, and the minimum lock-in period for that fund is about 5 years. So that's pretty much our private real estate funds. If you have any questions later on, we'll be able to answer them. All right, thank you.
Thank you, Shafran. And we weren't intending to do that, but I had to put him on the spot because he's part of your community, and I wanted you to know what he does for SP. We're very excited about having Shafran in the company. So let me move on. Okay, so now I want to talk about Sharia compliance. And I think sorry. do you?
Yeah, I got it.
All right. Thank you very much. So now we'll talk about Sharia compliance. Because everything I've said is all good. These are things that you might have heard before: value investing, growth investing, active, passive. These are all things that have been around. There's a lot of conventional investments that use a lot of these same terms. Where we kind of change direction is on Sharia compliance, because for us it's extremely important that we also look at the hereafter, not just what's in this world, but what's in the hereafter. And we want purified income. We don't want just any income. So Sharia compliance is extremely important for us. And I want to first start off with the definition of halal investing. Halal investing refers to investments made in securities which conform to Islamic principles. When these investments adhere to the guidelines of a trustworthy Sharia advisory board, they are considered to be Sharia compliant. So when I'm talking about Sharia compliant, I'm not expressing my personal opinions or making fatwas myself. I'm looking at what Sharia scholars around the world are saying. Some of the scholars that have been affiliated with our firm are people like Sheikh Omar Suleiman, Umar Khan, and we've had many others. You can always reach out to us if you want to talk to any of these scholars about Sharia portfolio or how we deal with Sharia compliant investing. But the main thing is, I'm not asking anyone to take my word for it. We believe in a Shura council of scholars that determines what the criteria are. They make the fatwas, they make the rules, and then we simply implement them. And one of the things we're proud of, and again, it's because we're actually Muslim owned and operated, I believe we were the first in the United States to follow a Shura council like this, ICWP in particular, which is a very well-respected, kind of the gold standard of Sharia compliance. And a lot of other firms have, well, not all of them, but some other firms have followed suit over time. But for us, being Muslims ourselves, it's really important for us that we're not just saying we're Sharia compliant, that this is really, this is what we personally believe as well. So one of the first questions, if you've seen any of my media interviews on Financial Times, Wall Street Journal, CNN, or any of the appearances we've made on any channel, one of the things is that they always ask, to be Sharia compliant, how much return do you have to give up? I'm always shocked that question continues to come up to this day. So one of the things I kind of want to point out is, if you take a look at this graph, the white line is the Sharia 500, basically the Sharia compliant stocks within the S&P 500, and then the blue line is the S&P 500. The S&P 500, for those who don't know, those are the 500 largest companies in the United States. So they're not all Sharia compliant. The white line is the ones that are Sharia compliant out of the list. And if you notice, the Sharia compliant section of the market is outperforming the conventional section of the market, this conventional index. And this has been going on for a long time. Our fund company, SP Funds, is actually partnered with Standard & Poor's on creating these indexes. We make the indexes for S&P. So if you go to S&P's website and you look up anything to do with Sharia compliance, you're welcome. That came from us. So we created this, and the reason they took such a big interest is the performance. They're not concerned that it's halal or that it avoids alcohol, pornography, gambling, or that it avoids riba. What they're looking at is the performance is just amazing. Today, the people who are investing more than anyone else these days are companies like JP Morgan, Merrill Lynch, Goldman Sachs. All these companies are just buying our funds. And again, not because it's Sharia compliant, but because it's outperforming. So the reason, and I want to explain this, it's, the reason why Sharia compliant investments do so well is because we're hedging against leverage. We're avoiding debt. There was a famous investor, Peter Lynch, who once said, it's really, really hard to go out of business if you don't have debt, right? So we're investing in companies that don't have debt or have minimal debt. Sometimes people ask, well, if there's any debt, why is it allowed? Well, it's not debt that's haram, it's riba that's haram. If I give you $100 and you pay me back $100 in a month, that's a halal transaction. There's nothing haram about that. But if I say you're paying me back with 10% interest, now it's become haram. So in the same case with businesses, when they're borrowing money, typically they're doing what's called net 30 days terms or net 90 days terms. What that means is they're buying products from somebody and paying them within 90 days interest free. So there's nothing haram about that. So when I say, companies might have a little bit of debt, there's nothing haram about that type of debt because there's no riba. So back to the point I was making, we're investing in companies that don't have debt or have minimal debt. So in an environment like now, where interest rates are going up, it just makes sense. These companies we're invested in aren't having to pay interest expenses. So of course they're doing better than everybody else. So I think that there's an Islamic way of doing things that if the financial services industry in the United States took advantage of, I think it would be incredible, not just for the industry, but for everyone. But I digress. That's just my personal opinion. But these are the scholars I mentioned earlier. So when I say, don't take my word for it, ICWP is the leading body of Shura scholars in the world that basically makes the rules for what is Sharia compliant. I encourage you to visit their website. It's AAOIFI, which stands for Accounting and Auditing Organization for Islamic Financial Institutions. There are scholars all over the world on this Shura Council. The scholars who oversee us are people on this board as well. They, alhamdulillah, have done an amazing job of allowing us, as the Muslim community, to participate in capitalism and in business and do it without compromising our personal values. So obviously some of the things that we have to avoid are gambling, alcohol, pork products, etc. These are pretty obvious. But highly leveraged businesses, that's the really big one that has really made a huge impact. And one of the reasons why so many non-Muslims are buying our funds now. I'm going to just switch straight over to financial ratios. Now this is the ruling, the fatwas from the scholars basically say that when we're investing in companies, there has to be minimal debt, that debt that I was talking about earlier, where it's effectively without riba. If the company's debts are less than 30% of their market cap, then they're very, very likely to be in that category. So that's why that's one of the criteria we look at. Another is the receivables. Now, this is one that a lot of people get surprised about. Why does it matter how much receivables a company has? That's because if a company has a lot of, if they're selling a product like General Motors, there's nothing haram about selling a car. But then when you start financing and charging rates of interest of 15%, 20%, then it becomes problematic and your receivables become really big because people owe you money. So that's why receivables are an important point. But again, this is all from the scholars. I encourage you to take a look at ICWP. You're also welcome to look at our website, shariaportfolio.com. We have a lot of information, including we have a lot of lectures from our Sharia scholars, people like Omar Suleiman and others. You'll see all their videos on our website. They're talking about these topics. So if you have any questions about Sharia compliance and you want to hear it straight from a scholar rather than from me, take a look at our website. We have a lot of resources there. So getting started, let's say I've convinced you that you should think about investing and that Sharia compliant investing is a really good way to go. How do you do this? So one of the things you can do is self-manage. You can open a stock portfolio anywhere. You can go to your local bank If you know a financial advisor, I don't know if there's any financial advisors in this community, but they might be good resources as well. You can go to them and open an account, and then you can decide what stocks you want to invest in. You can do your own research. I talked about value investing and how to, I didn't go into as much detail because of time, but we have a lot of videos on this topic as well about how to choose stocks. One of the easiest ways to know what's Sharia compliant is to just get our app. We have a free screener that shows what is Sharia compliant and what's not. And our screener not only shows our standards, but it shows quite a few other standards. So we have 5 different standards. So we're kind of covering everything. So you can see what's Sharia compliant according to whom and make your own decision on what you want to invest in. And again, that's free. Just download our app and screen the stocks you want. You can then buy stocks and funds on your own. You can buy Sharia compliant funds or individual stocks. Now, funds are a lot easier because someone is pre-selecting a basket of stocks for you, so you don't have to go and do all the painstaking research. So not everybody has the time or level of interest to do that. So if you want to just buy a fund, you can easily do this. And notice that with these steps, you're not having to pay anyone, including us, to do anything. You can do this yourself. And you can just buy Sharia compliant funds from us or from our competitors, whoever you want, and have your own Sharia compliant portfolio and work towards a future where your money is working for you. One of the questions is, well, what if I don't have time to do this? I don't want to do this. I want to get help from a financial advisor. So the easiest thing, I'm skipping over because I don't want to be late for the comma, but I'm going to go straight to choosing an advisor. Because if you do need help, if you do want someone to talk to who's looking at your specific situation and is looking at helping you achieve your financial goals, that you likely need a financial advisor. And there's 3 things to consider when you're choosing who is going to help you with your hard-earned money. The first thing is, do they know anything about Sharia compliance? Like, there are a lot of advisors. In fact, we have tons of clients who come to us because they went to an advisor who said, well, okay, I'm not going to buy any alcohol, but we'll just buy these mutual funds, which then invest in alcohol. These kind of things happen a lot, believe it or not. And it's unfortunate, but it happens a lot. So make sure whoever you're talking to actually understands what Sharia compliance is. The other thing is the management fees. Make sure you understand what you are paying. A lot of people are shy to ask, but ask your advisor what they're going to charge you because it matters. One way to make more money is to pay less. That's just a fact. So understand what you're paying your advisor, whether it's us or anyone else, and comparison shop. And then the most important thing probably is the investment philosophy. Like, what are they doing with your hard-earned money? I've had some incredibly wealthy people with several $100 million portfolios who will come to me and tell me, oh, I'm using this portfolio manager, and they don't understand what he's doing, but it just sounds good. There's a really slick brochure, and it's a big name firm, and it sounds really good, but they don't understand a word of what's happening. And I tell them, well, if it's your hard-earned money, why would you invest if you don't even understand what's going on? So whenever you're investing with someone, whether it's us or anyone else, make sure you understand what they're doing with your money. And if it doesn't make sense to you or you don't agree with it, find somebody else. So that's the 3 quick steps of how to choose a financial advisor. And as promised, I got done in about 45 minutes. So that's the fastest I've ever done this presentation. So I did skip quite a few parts, but I did want to respect the time. But what I'd like to do is, I think the Iqama should be happening pretty soon. And after Maghrib, we'll have a dinner here, inshallah. And anyone who has any questions or concerns or just wants more information or wants to ask about anything to do with their portfolios or the stock market, Shafran and I will be here. So feel free to come around and ask us. If we spend a lot of time discussing it, your biryani might be cold, but you're going to learn some amazing things. So it will be well worth it. So I think Is that it for time? All right, so I want to thank everyone for giving me the opportunity to come and speak to the community. It's always a pleasure for us. You know, my wife and I really enjoy mosque hopping, going to different masjids all over the country, and alhamdulillah, I think I've been to at least over 100 that I've spoken to myself in the U.S. over the years. I don't generally do as many presentations these days, but I was excited about this one because this is where Shafran is, and you know, we've been here many times now, and it's just been an honor and a privilege to be here. So thank you very much, and assalamu alaikum.